In this video, we'll cover the most effective trading strategies for those who are new to trading and those who are not profitable yet. These strategies are the most mechanical and the most profitable in the trading space. See you after the intro. The first strategy is from the legend himself, DTFX. The name of the strategy is called memory. So to trade memory, you need to know a few things. The first one being how to identify a valid low and a valid high. So a valid high is formed when a bearish candle closed below a bullish candle that established a high. That's when you can say the high is valid. But if the bearish candle doesn't close below the bullish candle, we cannot identify the high as a valid high. The second example shows how a valid low is formed. Like the previous example, a valid low is identified when a bullish candle closes above a bearish candle that established a low. This one also shows a bearish candle closing below a bullish candle that established a high. What do we call this kind of high? A valid high. Second step is to know how to identify your protected highs and lows. So to identify a valid high, we need to see a high form and then break a recent low that helped to form that same high. When a high breaks a recent low, it automatically becomes a valid high. So this drawing shows a series of protected highs, and when a low breaks a recent high, the low automatically becomes protected. In this case, a change of trend is formed, and that's what we call a flip. The third step is to know how to mark your zones. When a bullish break of structure happens, we mark the previous high and the low that breaks that same high. All these markings are done on a parent time frame, meaning we mark our zones from a big time frame and then we look for our confirmations on a smaller time frame. When we have a bullish break, we mark from the high to the low that breaks that same high. I hope you understand me now. When marking your zones on a downtrend, we mark from the low to the high that breaks that same low. On a downtrend, we mark up moves, and on an uptrend, we mark down moves. We have another break to the downside. To mark our zone, we mark from the low to the high that breaks that same low. Let me show you a real chart example. We had a break of structure to the downside, so we use our fib to mark from the low to the high that breaks that same low. And we mark our PDRA in the premium zone. That's when we can go to the small time frames and look for a flip pattern to execute from. This is a bullish example. After you identify a break of structure, mark your zone from the high to the low that breaks that same high with your fibs and wait for a retracement into your zone after you've marked your PDRAs. Go to the small time frame and wait for a flip pattern from your higher time frame PDRAs. I drag my fibs just to show that price is fractal.